Good morning, everyone. I'm Vince Lansing. This is the GoldFix Market Rundown. It's Tuesday morning, 7:55. 10-year yields are down 2. The dollar is 98.97, up 31. S&P 500 is 6405, up 14. The VIX is 1472, down 32. Gold is 3316, up 2. It was up about 10 an hour ago. Silver 3805, down 10. Copper 555, down a little less than 1. WTI 67.64, down 17. Natural gas 308, up 2. Bitcoin up 400 at 118 spot 500. Ethereum 38.21, up about 60 basis points. Palladium up $5, 12.37. Platinum 13.88, offered unchanged. Gold, silver slightly firmer. Grains all down. Wheat down over 1%. Okay. What are we going to talk about today? Well, there's the front page. Yesterday was all about the UBS silver report. And our commentary says it's a lot. We think it's a more important report than it may appear. People actually were mentioning $42 isn't really far away. Yeah, but it's a 10% increase in price target. So that's a 10% move in 90 days. Anyway, we like that report a lot. Lower right-hand side charts, global central banks have a 0% success rate. That's a paraphrase of a statement by Deutsche Bank. We're going to show that accompanying chart because we think it's quite amazing. And we're going to go through a couple of the charts on that to give you a taste of what's going on there. So they had a very good chart pack that came out. And then we'll talk a little bit about the gold-silver ratio. Last night, I put out the GoldFix PM, but I didn't email it. We'd already emailed you 3 times, I think, during the day. So, but there was a commentary about the gold-silver ratio that we're going to discuss. Let's start with the analysis. So we're looking at a chart pack, and it says global central banks have a 0% success rate, and that's our title. But there are a few relevant charts on gold, inflation, and U.S. debt excerpted from a comprehensive chart package by Deutsche Bank, and as alerted to by Zero Hedge. And we captioned them for contents. The last chart, which we'll show you, is killer. We're going to go through a couple of those charts to give you a feel for it and make some comments along the way. Here's our first chart, gold prices in real terms. Over the long run, virtually all commodities struggle to outperform inflation. But since money was no longer tied to gold in 1971, it has increased tenfold in real terms. The reassessment of U.S. exceptionalism. Here's the first half performance of the U.S. dollar index. The reassessment of U.S. exceptionalism is real. This has been the worst first half for the U.S. dollar since 1971. Conversely, it's also been the strongest first half of the year for gold since 1980. Indeed, gold remains the standout performer of the 21st century so far, Bitcoin aside. It's returned more than 11 times its value from the end of 1999, with the S&P up only 6.8 times. Here's a chart we think is interesting, as simple as it is to look at. There's an insight that the bank gave that we had no idea about. So it was good to learn that. In the modern world, money supply, M2 money supply, is always, I'm using their words, always unlikely to return back to the previous trend after a spike, as it would be too painful. And in the modern era. Now, I think there's a couple things that jump out at me here. One is, again, paraphrasing the report. Powell has done, I'm using their words, Powell has done a pretty good job getting it close to trend, but it's not back on trend. Okay. And now we're looking at pressure to ease again. So I don't think we're going to have a mission accomplished here anytime soon. And M2 is creeping into people's conversations again in context of Bitcoin, in context of China. That's M1 actually, and in context of a couple other things. But we mentioned the financial repression yesterday. M2 is going to start creeping into the vernacular again. That's what people will be talking about. The other thing we wanted to mention was it's too painful. Like, we never go off the drug. It's too painful. And so we hobble along and hope to innovate our way out. Here's the chart that's just killer. The average annual inflation rate of 152 economies since 1971 when Bretton Woods collapsed. No economy has averaged less than 2% inflation, but Switzerland at 2.2% comes the closest. In this fiat economy era, no economy has averaged less than 2%. There's just, central banks have a 0% track record in controlling inflation. Now, do you think they really want the target to be a target, or just something to give you to look at, to hope for? Hope springs eternal. The target's not important to them. It's just a tether. You'll never see it go the other way. Let's put it that way. A couple other charts I think we'll just throw in here since we're moving so quickly today. There's global M2 money supply versus Bitcoin, implying that Bitcoin is cheap. Interesting. You can't ignore that. And central bank policy rate across 83 economies as on July 1st, 2025. The case for this chart is, this is Trump's case, that our rates are actually high relative to the other G7 economies, considering the strength of our currency as well. G7 DM markets, that's the light blue, emerging market economies. I mean, look, we have a higher rate than many emerging market economies. Not most, but many. Anyway, that's Trump's case. Make of it what you will. The rest of those charts, as excerpted from the full report, are in our post that we just sent out in the email in premium. Related posts: silver, UBS raised targets of $42. We mentioned that. Founders, that's the killer's chart comment. Chris Whalen had a post yesterday, and the big gold silver unwind. So let's take a look at that. First data on deck. Today's Tuesday, consumer confidence, and a couple other things, I think. Inventories. Case-Shiller is pretty important. All right. Oh, let's stay here, and we'll go here. All right. So on your screen, you see 4 of the same chart, gold, silver by month. And I will make notes on one of the charts and save them if they're important, but it won't show up on all the charts. And as I was looking at the gold-silver ratio last night, I pulled up this chart, and there it is. Goldman recommends buying gold and selling silver with the gold-silver ratio at 102. So near the high, gold-silver ratio came off since then. Just to give you an idea of how much the gold-silver ratio has moved since everyone came out bearish on silver. At the peak of, what do you want to call it, Liberation Day, or whatever April 1st was, the after effect of Liberation Day. So give you an idea, right? So let's get back to a chart that's less convoluted, less cluttered. I don't usually make calls on terms of price, but I'm pretty comfortable saying this because it's got a nice risk reward in it. If the gold silver ratio does not get above 89, call it 90 on a monthly closing basis, then the gold silver ratio will trade 79 within 3 months. Could happen within 3 days. But if you look at the patterns going back in the past, when the gold silver ratio gets overbought, it has a reciprocal underbought or oversold situation. And if you're wondering where I got these numbers from, there are two channels there going up, right? The lower channel is the one we're in now. And this channel has been important to me since 2021. I drew it after the other channel broke. And it tested the highs, and now we're below it. Not only are we below it, we're also below a channel that I drew when I was trying to decide if the market was just in a range this way. So we're below 89. I'm going to call it 90. I want to get that number in there, right? Below 90, we should go to 79. So what is that? 3,500 divided by 80, 42, and 30. What is that? I had to take off my shoes to count that. It's about $44. So with gold at $3,500, that puts silver at $44. So if gold goes to 3,500, silver should be at 4,400. I'm sorry, $44, unless it's another tariff panic on the geopolitical side. That's it. Let's take a look at the rest of the markets. I think we're due for one of these. All right, so there's gold. That's a monthly. Certainly, technically speaking, that's a bull flag. It's also becoming a ledge, and these long wicks are telling you there is real selling up there. And I suspect that this was bullion banks that were long, making a lot of money, booking profits. And I think you got producers in here now. Who knows? You could have China making some markets. Silver. Silver's not toppy at all, and not overbought yet either. So I think it gets overbought when it gets above 40, and then it backs off for a little bit. So gold can stay in this range, captured. Gold is captured while silver goes higher. Everything's catching up. Copper. I don't have a real feel for this. It's out of a structure. Looks like it's a mini version of like palladium or platinum. Well, nothing's a mini version of platinum. Platinum is platinum. A mini version of, oh, look at that. Okay. Oil. Let's take a look at oil. Yeah, maybe it's a little early. Maybe we're not on the lows yet. But there are good signs. This is kind of like gold in January and February of 24. A high, a spike high, a retest, a sell-off, a weaker retest, and then a working down for it before it went back up again. Anyway, something to keep your eye on. Vince, gold's perking up a little bit. Gold, silver is going to have gyrations. There's going to be people coming on both sides now. Oh, gold, silver's backed up. I think I'll buy some gold. I think I'll sell some silver. It's going to happen. It's happening now. Have a great